Hi folks, Nick here. I wanted to run through a few tickers that we usually watch. Let's start with the ticker du jour, which is Netflix. Uh, split, announced a split last night, 7 for 1, and the stock went crazy. It touched 706, I think, the highs, thereabouts, 706 and a quarter, and is obviously green. So where to from here? I think we've talked it up already a lot, especially on the last jump, and I said 700 is feasible, and the jump was not to be shorted because it was based on fundamentals, meaning it had better prospects. It had expansion prospects abroad, especially China, so we don't short stuff like that. Does the split make it more bullish? No. Does the story continue to be bullish? Sure. I think also a disconnect when people look at it, they count households. I think households can have more than one Netflix account, so they're underestimating the potential. Will it have competition? Absolutely. But it's still out there, and its prospects are good. Somebody brought up cash flow. Yeah, that could be an issue. I think it has a lot of off-balance sheet stuff, but at face value, it's a do not short stock. So can I chase it here? Only with debit call spreads. I don't want to do anything crazy with the credit put spreads. And Netflix just flashed red. You saw it on the screen. This candle just went red. There you go. So that is nuts. Okay, and that just tells you how nervous people are. Of course, we have the Greek situation ongoing as well. All right, so I can't chase anything. That doesn't mean it's not going to go higher. It's not for me. I can't put my money, my family's money in the face of danger like that and risk buying Icon's profits. If I entered it today, I basically bought Icon's profits because he said he just exited it. So that's one, Netflix. Where to from here? I don't know. I don't want to catch a falling knife before it starts falling. So credit put spreads are now too late on a day like today. After such a high run, you end up having to step up to here in order to get any sort of premium, therefore increasing your chances of loss. And however, that doesn't give me the right to say I can do credit call spreads up here. It's been a loser's game. So I would use debit spreads. If I'm bearish, I will do a debit put spread. If I'm bullish, I will do a debit call spread, and I'm neither nor. I do not like to buy spreads unless it's a small lottery ticket. All right, so another stock that kind of reminds me of the same thing because they have great prospects, only this one has more meat. Pardon the pun. Chipotle. It's a well-liked stock. However, it's been on a slide, an unusual slide. Usually the stock market likes to give it a pass on when things go bad. But technically speaking, I drew this point and it bounced off of it in an area which was area I labeled area 2, area 1, and area 2. So I understand, but now it's in limbo on this green line, which is pivotal, obviously, in the past 12 months. What else is pivotal, important I should say, is this orange line. Why? Because it's setting lower highs, except for this little poke up here. Lower high, lower high. So when it gets to it, I want to see it bust out. It failed here, so will it bust out here? So there is a situation where you could consider that, yes, if it busts out here, this way. So fall, and then come out here, and then come up to here, and then try to do this path again. That's a possibility, or revert down to my target. Either case, credit put spreads that I posted a while back in the low 5s survived, and I can probably find more of them. The only hiccup is this. The earnings that are coming somewhere on the 20th, 21st, this is an estimate, so you'll have to look it up to know exactly when the earnings are. If you know me at all, you know that I don't like to take full positions into earnings. So I would not set a credit spread into earnings or hold a big position in stock into earnings or a big debit spread position. So what do I usually do? If anything, I wait until after the earnings and I do the trade. Those are the best trades. Or take a small lottery ticket, meaning I sink $100 and say, okay, I have a chance of making 700 or 800 or 1,000, and it's a complete lottery ticket. I won't be upset if I lose it. Just like a lottery ticket, I call them lotto trades for a reason. There are no conviction trades because they're a coin flip. What happens in earnings is a coin flip. This one, they went up. This one, they went down. This one, they went down. This one, they went down. It's absolutely random, the reaction to prices. Look at Disney. I'll show, which will come up later. Believe me, earnings is always a coin flip. So what do I do here? I can do a credit put spread, but I would have to make sure it expires before the 21st-ish. Make sure it expires before the earnings, or I close it. Markets are extended. However, they seem to have a bid under them as soon as we start dropping, because a lot of the fundamentals are good for companies like Apple, for example. I mean, Apple is not going to make less money because of Greek problems. However, if the markets fall, Apple will fall. But at one point, will the company itself start buying its own stuff? So you can kind of like gauge how far markets will fall without new bad news, like a debacle in the U.S. or a debacle there. Fundamental bad news, not individual incidents like the Greek situation. Okay. All right, those are two stocks. Another one we looked at is this one, Avalanche. I'm not one for biotechs, but I did talk about it, so here I am. We drew a head and shoulder-ish pattern. I say it's never perfect when I draw it because I like to use a crayon, but look at this. I mean, at this time, it hit exactly where we were. And I said, don't try to catch any fallen knives because I know nothing about it. After hours, it fell on disappointing results. Hopefully, I kept you from chasing it, meaning this was an example to show you what not to do. Don't chase a run-up. Don't chase a run-up. Yeah, you could have entered here and ridden it up to there, but there's a great chance that this could have happened before. Okay, so if you chased it here, it started falling, you got shaken out of your position if you have an automatic stop, and then it runs right back up, and then you're just beating yourself up because, oh my gosh, I should have stuck with it. I would have doubled my money. Well, shoulda, coulda, woulda, but if you hadn't chased in the beginning, you wouldn't have been in this position. Chasing makes money for those who know what they're doing, for those who can get here every time. I'm not one of those. Give me a set of circumstances, I'll plan around them. This, never a good for credit spreads. Biotechs, pharma, anything that's so violent and is prone to headlines any day is not good for credit spreads, period, every time. All right, so let's see here. Another focus point of ours were currencies. So you can see that the FXE, this is the euro versus the dollar. It started out the day weak, and now it's getting better. You know, they say going to parity, the dollar versus the euro, meaning this 105 should be closer to 100, which is off the screen. You know, it's trading in a predictable range, so currencies are above my pay grade, above everybody's pay grade, but I can tell that this was a challenging area. So if it can take over the challenging area, it can rally. Until then, the dollar is strong, which means that all of the fundamentals for U.S. companies should be challenged because they seem to all say, oh, my God, you know, the dollar hurt our P&L. It's all excuses, most of them excuses. You didn't see it coming, then your CFO is not as good as you think he is or she is. All right, Goldman Sachs. Whoa, nice, huh? Exceeded any roof I have except for this one. This is a potential target of mine that I drew from a while back. You know, touched it and not falling today. I didn't read any headline. However, I do caution when we do have rising wedges like that, they tend, if they do break, and by breaking I mean like if it loses this line right there, it could come down to here. So let's draw a little circle, potential, couple of potentials. Not, this is, you know, worst case scenario, but not worst case scenario, a bad scenario, but it could happen. So range is tightening, you know, higher lows, which is always good, bullish, and higher highs. And now we have a poke, and here's the poke. And it's going to continue bouncing between these two, or break down here, or bounce one more time to here, and then to here, and then come back down to here, and then break down here. you can see how there's going to be a decision to be made soon by Goldman Sachs. Great company, good management, well respected, less so now than before, but still. If rates rise, financials should be rising, which I mentioned that rising financials can be bad for markets in general because that means rates are rising. That means that markets are going to be getting nervous. BAC, as far as trade on Goldman Sachs, I can't do anything until I get resolution as to where it wants to go. Actually, let me go back and tell you why. Also, earnings are coming soon, so maybe I'll wait for this earnings, let people react. If they sell it like they sold it here, then I'll do a credit put spread on it, I promise. Bank of America, I stay away from it because of its legal issues. It seems to be hated by the government. Look at this. Yeah, so earnings are coming soon. They're right there, and I don't want to hold anything into earnings, so I don't want to do anything with Bank of America. I don't like the price action, although this is a nice bounce. But look, every bounce gets written out for some reason. Every bounce, they find a way to mess things up for Bank of America somehow. Blue, JetBlue Airlines, been violent. Challenged that roof, boom, busted right through it. I'm sorry, I was thinking JetBlue because I had AAL in front of me next. This is Bluebird Bio. I think came recommended from Jake or asked about it, and it broke out. Every time you ask me on a stock that's doing this, I'll say exactly the same thing. Too hot for me to short, too high for me to chase. If it's a biotech or pharma, I can't do a credit spread anyway. However, at least this one gives us a nice channel, rising channel, and here it is at the lower end of the channel. So if I extend this, so is it going to get to here? And if it does it bounce or break? That'd be the question. So what do I do here? I won't do anything if I were trading it until it tells me what it wants to do here. If market's correct, biotech and pharma have a lot of profits, and profits will run out. If you think, oh, this is too far for it to fall, it's $5, $10, $20 away, I remind you that this is 1 year, 12 months ago, this was $30. You think it rose $100 and some in 12 months. Can it not lose $100 and some in 12 months? I think it can. It has a possibility. Anyway, American. I have never liked trading airline stocks. They always seem to mess it up somehow. They find a way to lose somehow. They haven't had follow-through. That's the issue. They run, they fall, they run, they fall. So that's what we call choppy. And this dome behavior is bearish, meaning the bulls are trying, and then they fail, they try again, and then they fail, they try again, and they fail miserably. So are the bulls tired? And look where they come back, this area and this area. So let me zoom out to see why these two areas are important. This area had been a roof until it busted from it right here, and emphatically, and then used it as a bounce, so support. So what used to be resistance now became support, and then it broke down below it, and here we are at it. Is it going to again turn into resistance, or they're going to be able to retake it again? Same for this red one. But further back. Resistance, broken through it, support, support, boom, resistance, and look what happened. So is this red repeating here? Meaning there's going to be downside to this box? I'm not sure. So I'm not catching this falling knife. I could do a credit put spread here if I had visibility on earnings and some sort of a resistance level. So if you're interested in any of those, let me know. Maybe we can do something specific on that. LULU today caught my eye, yesterday caught my eye actually, on this very bullish candle right there, the white one. It showed me like it wanted to take this back out. And let me zoom out to 2 years and I'll show you what I'm talking about. Meanwhile, markets are still falling. This zone is important. Why? It's kind of the neckline for a whole bunch of bullish setups. Like cup and handle, you've heard this, when you have a formation that looks like a cup and then a more shallower cup, so like a cup and handle type of a deal. It's not exact here, but I'm pretty sure I can draw one here somewhere, or inverse head and shoulders. Those are also bullish. Why? Because bears sell, 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 the bulls fight, and they take a long time. It's a long, drawn-out fight where the bulls prevail to the neckline right? Bears, bulls, they prevail to the neckline. And then the bears say, we can do it again. This time we'll win. And they do it again. They lose miserably, the bears, because the bulls don't let them even come close to what they did last time. They come back to the neckline. Then you can say, okay, so the bears must be tired. Now here we have another little dip, but you can see the spirit of it, right? So it has a potential. It failed here, and it looks like it failed here, and it looks like it's failing here. But it's still the point of contention. If they get to here, it has potential to get to here and then to here. So be careful shorting LULU too tightly, and if you have profits, I would book them, just in case they fail again. That's my opinion. Coach, red today, that's a bad chart. I don't know what it is. Coors maybe down hard. Michael Coors fell hard. Everybody hated Coors for a while. Everybody loved it. This one fell in sympathy, and I thought it would be a better way to catch Michael Coors if you wanted to catch it by catching this guy. They're both losers as far as we know, and there's no reason for me to chase any of that or try to catch a knife. Who knows? We are at all-time highs in the markets, and they can't even catch a green tick. So sustain a green tick, I should say. Not for me. There are better tickers out there, like this one, Disney. Let me zoom in. First of all, you can tell how over time it's, you know, as I say, from the lower left to the upper right. Great management, great products, great brand globally. And, you know, this was such a disappointment when they reported, boom, to a huge candle that got badly rejected, but look what happened. We came back to it, busted right through it, and now we are past that candle. So it's trading some sort of a ascending channel. And credit put spreads would have worked. Credit call spreads would have not. Here's another eye of needle you can thread out in time if you want. However, be careful of the next earnings. I do not want credit spreads in the earnings. I can't imagine they mess up the quarter, though. But even if they don't mess up the quarter, you can't imagine how markets will react. This quarter right here where they sold them hard was awesome, numbers-wise. Markets didn't want to see it. I don't know what they looked at, but they rejected them. And that is why, my friends, that earnings trades are complete coin flips. This one right there. Disney. Disney had an excellent quarter, and they got sold hard 3 days in a row. All right, who's this? FedEx. FedEx, roof, buying breakout. Why? Because I tell you that we have tightening range, higher lows, lower highs, comes into a point, and energy needs to release. Bam or boom. So in this case, they broke out, but here they go back to it. I don't like the fact that they messed up the earnings, given that it's supposedly low gas and everything, and they still can't deliver a good quarter. Excuses, and now they are losing the orange line. I don't like it. And they better stop at this green area. In fact, I want to duplicate it and put it over here, kind of an extension, because it's an important area. They better put the brakes on the fall. I won't catch it until I won't try to do credit put spreads until they come to it and tell me that they're going to be able to replicate these bounces. Otherwise, because this area was resistance, and then they broke through it and they used it as support. They better use it as support. If not, they may break down and want to revisit this area. Until then, I'm on hold. All right, Nick, I'm going to sign out. This is long enough, 19 minutes, but you have the option to not watch the whole thing. If you have any follow-up questions or any requests, please don't hesitate to ask. Signing out.